Welcome to Sum Zero, everyone. Today we have a great guest, Ben Axler. And I guess before we begin, I gotta give Ben a good intro here. Ben was the associate on on my desk back when I was an M&A analyst at Credit Suisse in New York. So this was 20 years ago or so. And you know, I have to say, Ben, you were one of the only guys I knew in banking who somehow managed the time and to trade stocks. Like, while the rest of us were struggling to build models and get through presentation decks, you somehow found some free time to have fun in the markets. So I'm not surprised that over the last couple decades you've managed to not only launch a fund but grow it to being sort of a substantial brand, and especially with your focus on shorts. I think you've certainly carved a niche out for being a great shorts analyst. So with that, let's talk about Oatly.
By the way, Divya, do you remember the deal we worked on that failed so miserably that inspired my passion for shorts?
Was this an energy deal, or which one are you referring to?
Absolutely, ethanol.
Ethanol, yes. It's funny. One of our guys ended up working for that company, right? You're talking about Hawkeye.
Hawkeye, yep. Yeah. Private equity paid $1 billion for an ethanol plant that went to zero.
Right. Actually, that ethanol story kind of reminds me of Oatly in that the private equity buyers didn't factor in corn prices going up massively as they did.
Exactly.
As the ethanol craze. And so commodity prices are a big piece of the Oatly story. But how did you just walk us through how you kind of, how did it even hit your radar? Was it a kind of a broad sort of skepticism around healthy food, or what? Just walk us through your screening process.
Yeah, so this was sort of a non-traditional idea in terms of how I look for shorts, but we're based here in New York, and Oatly made a pretty big splash in the Northeast through marketing, particularly on public transportation, buses and at bus stops. Now they've expanded. I think I even saw them promoting at the Yankee Stadium. But the brand, and their marketing has always been a little innovative, a little catchy, a little differentiated. Certainly caught my attention and piqued my interest. My wife happens to be a vegetarian, and this being, a vegan product, prompted us to go look for it. And when we went to look for it in the stores, we couldn't find it. And I thought to myself, well, what kind of company spends millions on marketing and, doesn't make itself fully available or doesn't direct consumers where to purchase it? And so, that I thought was kind of odd. And then we saw the company IPO recently, and I said, wow, this is amazing. And look at the valuation and everything. And knowing that I could barely find the product, I thought this is worth investigating. And that's what really kicked off our interest. After I saw the IPO and having that familiarity with the brand and not being able to find it, I thought, let's do some work here.
Yeah, and it was like, I think at its peak, something like $20 billion in market cap for oat milk. Can you just maybe explain the product itself?
Sure. I mean, their core.
What is it and what is it not?
Okay. What is it? So about 90% of the company's revenues is oat milk. By way of background, this is not a new company or a new story by any means. They were founded in the 90s in Sweden, through some science, lab testing, and they built out a niche little market for themselves, mostly in Sweden. The company has never really been profitable. I think that's important as we talk about the story. And, they more or less dominated the Swedish, market for a while. Then they picked a little fight with the dairy industry there because, they call it oat milk, but the dairy industry might beg to differ and say, well, milk comes from a cow, right? This is non-milk, this is non-dairy. So they got into a little bit of a spat with the dairy industry. I believe they lost, a lawsuit there. They clearly, we believe, have suffered market share loss there. Why do we believe that? We have Euromonitor data. we also have evidence of them stopping disclosing their market share in their foreign filings. And it was around that time in 2016-17 where you notice they made a pivot to foreign markets. First the UK, Germany, and now the US. And that's, that's kind of a common thing we see, is that when companies experience some sort of problem or hit to their earnings, and they were marginally profitable, and then they went to pretty strong losses, that they pivoted the story to international, and then ultimately led to the IPO. But what is it? It's oat milk. It's created from an oat base. That's 90% of their sales. They've had other niche products such as oat yogurt and oat ice cream. They talk about in their prospectus about their opportunity to expand their portfolio into new product areas. But what they don't talk about is that they've had more failures, we think, than successes. They had an oat breakfast drink and an oat energy drink. We went to the Wayback Machine and read the foreign filings. We've seen that they've had not all positive introductions, but some failures as well. So that's important to keep in mind when we're thinking about what's the growth story here. Can they really grow beyond just 3 products?
And just on kind of sticking with the product a little bit, can you just explain the barriers to entry with this, this particular product? I mean, if they stick with oat related products, who else is in the space? Who could get into the space? I just want to understand the competitive landscape here a little better.
That's a great question. So think about, what did we learn in business school? The 5 forces, and one is, barriers to entry, competitive disruption. I mean, our opinion is there's no barriers to entry here. Oat milk at the core is oats, enzymes, water, a lot of water, and flavoring and ingredients. I mean, that's pretty much it. So there's very little barriers to entry. And why we're particularly excited about the short is, competitors are playing catch up. I mean, in Europe, obviously they compete with Danone, some other, there's other players in Italy and some of the other regions in Europe. But here in the US, where the growth story is, where they're pitching the upside potential, we're finding dozens of competitors, right? And, the IPO reports that the banks put out don't even mention SunOpta, which is another public company that is really a wholesaler. They're expanding their production of oat base and then selling it to others who can then slap a label on a brand and enter the market. We saw this. Spruce Point wrote a report on something similar in the whiskey industry, MGP. We successfully shorted. There was a boom in whiskey demand, and MGP was sort of the middleman wholesaler selling whiskey to other companies that then slap on a label and enter the market. And sure enough, now there's hundreds of whiskey players. We see the same thing happening in the oat milk space. You're going to find that Chobani, is there. You're going to find that PlanetOat is a big player. Coca-Cola has Simply Oat. One thing to point out, actually, which is interesting, is Pepsi made a move into the market. So Pepsi, as we know, owns Quaker Oats, and they couldn't crack the market and couldn't make a profit, which kind of tells you something. Pepsi obviously has the Quaker Oat brand, and they have a lot of marketing money and a lot of ability to win if they really want to win. They've already retracted. And then you're seeing, lots of other niche brands come, not just with pure oat milk, but now you have blends, right? So if you want to confuse the consumer even more and add more competition, what's stopping you from selling an oat almond blend or an oat flaxseed? So the market is big now with dozens of competitors. We expect it to get even bigger. And if all Oatly can rely on is its brand, which at the end of the day, we think that's really what's going to drive sales is the brand, and taste, obviously, a degree, and price. Well, we think they have a lot of room to drop the price because they're already above market in terms of price, and their brand, we think ultimately won't support their success.
It's funny. I was on their website, and they had priced a quart of Oatly. 6 quarts of Oatly for $32. Yeah. Which is like, that's sort of, if you do the math, it's like over $5 a gallon, which is twice the price of a gallon of regular milk. Obviously they're competing, it's a different product, but I hear your point on there's probably going to be some downward pricing pressure. especially if you think of Chobani and even like a Trader Joe's getting into this.
Yeah.
It wouldn't take long. What is it about their? I mean, when you have these somewhat commoditized products, the marketing is actually kind of an important part of the overall thesis.
Yeah.
How do they market? Is this like a social media strategy mostly, or what is what's their channel?
Yeah, I mean, look, we've seen them at trade shows, obviously to break into the market. You might find them at an organic expo or a vegan expo, but they're doing a lot of billboard marketing. They just entered New Zealand recently with a splashy billboard that got a lot of negative feedback because it didn't really communicate a message well. And there's been some articles on the internet about how poorly that's been done. But yeah, social media has been big for them. They're obviously on Twitter, they're on Instagram. I think, look, initially the company had some creative marketing and built a brand and a following. To a certain extent, when they lost the lawsuit in Sweden, they were kind of viewed as like, the David versus the Goliath and taking on a big industry. And so rallied, some support from a class of people that want to fight the power and support the small guy versus the big guy. They do talk about their strength with the millennials and Gen Zs, and that's kind of their core market. But we pointed out in the report also is that if you really want to change the dynamics, the perception, and consumer behavior, why aren't they marketing to children a little bit more? Ripple, which is a pea milk, is doing that. I mean, kids are some of the biggest consumers of milk, at a younger age, but you don't really see them making much of a marketing effort there, whereas some of their competitors are. So we kind of question, the longer term sustainability. If your consumer is a core, niche, a millennial Gen Z, well, that's great. But, over time, if you want to have a lasting brand and a succeeding brand, you better be focusing on the next generation of consumers, not just the current one, right?
Well, and I think the other kind of important point here is just obviously the valuation. So we're talking $11-ish billion market cap. What can you just maybe frame that number in terms of what's baked in? What is the implied growth given the current market cap?
Yeah.
And just what sort of hurdles they need to overcome to justify that number relative to other competitors in the space.
Yeah, well, this is a sales growth story, right? And what's baked in is 20% growth for the next 10 years, right? And that they're going to be a multi-billion-dollar company in sales, right? But I challenge you to find one beverage company that's been able to grow at 20%, for 5 to 7 years. I was looking at Monster Beverage. We all know the energy drink category and the huge success that Red Bull and Monster have. Well, even Monster, once they got to 3 billion, the growth rate came down to 9 to 10%, right? And so my view is if they ever were to make it to a $3 billion market cap, by that time the multiple is going to come down. I mean, we're talking about a company trading at 10 plus times next year's revenues. By the time they make it to $3 billion, that multiple is going to look more like 2.5 to 3, at best. And so I just see the company never really being able to grow into its current, multiple. And also, by the way, Monster, just to point out, by the time they got to 3 billion and we're going at 10%, their gross margins are 65%. Oatly is closer to 30. I think there's little, if any, chance Oatly will be able to double its margins, and Monster self-funded its growth. It was cash flow positive the whole way. Oatly, let's not forget, Oatly, even when they were dominating the Swedish market, generated very little cash flow and made no money. So that's just to put things in perspective for you. Everything has to go right here, right, to justify this multiple. And we see everything currently going wrong. One of the big factors we see, which the company doesn't quantify in their disclosures, which is kind of problematic, is the commodity costs. That is a huge input here, right? We're talking about an oat company that has, call it 75% of their COGS by volume coming in as oats. And, we're experiencing rampant inflation right now. Oat prices are up over 30%. Rapeseed oil, which is You can think of it as like a canola oil. That's up almost 40%. And they disclose no hedges. We don't know, do they have long-term agreements? You know, as they grow, are they going to be able to source enough oats? You know, all these things we just don't know, and the company's been silent on. So we think that's gone against it. So think about it this way, right? They're already the highest priced product on the market. Competitors are lower, and you have input costs rising. It's going to be difficult for them to pass on higher prices when you're already the highest priced guy on the market. So we see nothing but a margin squeeze happening there. Yeah. The other thing I need to touch on, you said what is to justify the valuation, is the capital spending. We did a lot of research on our report here. The company's building, well, they're fixing problematic facilities in New Jersey and Utah. They say they're going to open a facility in Dallas. They're opening one in Singapore and China. This company has never proven that they can operate without issues. You know, they've had historical issues. We think they currently have issues. So you're taking a bet, can they grow and produce, you know, enough to supply the market? We think no. And then what is it going to cost? We did a lot of research to figure out what was their unit cost per liter of new capacity. And historically, it's been about 60 cents. But, you know, some of the brokers and some of the more skeptical analysts have costs skyrocketing to over, you know, $1.10 per liter of new capacity. So CapEx costs are going to skyrocket here. And you have no assurance that they're even going to be able to operate these facilities, you know, well enough to produce, because nothing they've done in the past has given us any comfort that they can do this. So to get back to your question, everything has to go right, and everything has gone or is going wrong.
Do you have any data on market share and how that's tracking for these guys?
We don't have exact market share, but our anecdotal evidence since we've been tracking the company is that they've been losing market share. We know they've lost market share in Sweden historically. That's irrefutable. We know the UK, which they entered, has gotten more competitive. We've done some research there. We know that the US, clearly over the past month, they've gotten more promotional in their discounting. We can track it. We've been doing channel checks and seeing discounting, and we've also seen them lose some slots on some certain locations. And then online, obviously, you can go to Amazon, you can go to Walmart, you can go to Albertsons, you know, all the big supermarkets. We've been taking screenshots and tracking, and it's very clear they've been losing not only their promotional prominence, but in some cases the retailers have been discounting the milk, they've been discounting the yogurt, and they've been discounting the ice cream. So we think they're losing market share, and a price war is already happening. There's definitely heavy discounting by Chobani, no question. And you mentioned Trader Joe's. You know, Trader Joe's, Target, Wegmans is a big supermarket. They all have house brands too, right? No frills house brands. So, you know, prices are going to come down. Shares, we think, are going to continue to be lost.
Is there any difference in taste between Oatly's oat milk and any of the competitors? I mean, or is it more, I mean, you know, is it like water? We're kind of like, it's all the same, or with some differences on the margin? Or is there a material difference in the product itself? Like, can you tell the difference between Oatly oat milk and?
Look, there is some marginal difference. You know, I'm not going to claim we ran a blind taste test as part of our research, but you can read all about this on the internet, right? Everyone has their own different preference. You know, some people want it a little more creamy, a little bit more sugary.
Yeah.
And there is a difference, right? You know, we have one of the ones I prefer, you know, I have the Pacific oat, definitely has a little bit more sugars. And this, by the way, the interesting story, this is produced by Campbell Soup. And Campbell's, we found out, we're getting a lot of intelligence after we put out a report. We're learning so much more about this company. But we found out that Campbell's tested the product and believed that Oatly was mismarketing their claims of no added sugar. And we just tweeted that the Better Business Bureau sort of policed this. Why? Because when you break down oats, it creates sugars, right? So Oatly is saying, oh, no added sugars, but it's impossible. Their process adds the sugar. So, you know, there's evidence of this company on the margin, misleading or not being so straightforward about the actual production and the ingredients. And we obviously have concerns about the financial statements, but when you see concerns about the marketing of, you know, what the actual ingredients are, it's even more concerning.
Yeah, and actually on the marketing front, like what is the actual environmental truth, as far as like, is drinking oat milk actually better for the environment or not? I'm just curious to hear what the pro and con arguments are for just the premise of the business itself, like which is definitely environmental.
Yeah, there's no question. Look, I think we found their sustainability report that they based a lot of their research on. We had to dig pretty hard, but it was out there on the internet. And look, on the margin, it's probably a little bit better than dairy, but not on every factor. And we called out the company, in their investor presentation. They cherry picked, right? They show where they're good, but not where they're bad. Where they're bad is on water. I mean, it's very water intensive to produce this oat milk, and it's a little bit less intensive than maybe almond milk. Almond milk is notoriously water intensive. So relative to other plant-based milks, it's a little bit better. But what we found out and what we think the market didn't know, and we did this through freedom of information requests, is it generates a lot of wastewater. So this is all the byproduct that then has to be dealt with. And you can see in our report, the FOIA showed that Oatly underestimated to the city of Millville all the harmful TSSs and COBs and the product that had to be dealt with. And if that is just released into the sewer system and then ends in the goes in any of the streams, or it can kill wildlife, or in certain cases humans. So there's this whole other aspect of the ESG, the waste byproduct that has to be dealt with, that we felt Oatly wasn't as transparent about. And so we wanted to get that out there, let everyone know it's not as simple a calculation or representation as they might make it big.
Yeah. So we've got, I guess, a story where you've got, very high valuation, potentially compressed margins over time, increasing competition. Can you give some color on the management team and maybe some of the more provocative stories you found, just looking at who runs this business and what their track records are?
Right. So if you followed Spruce Point, we're very focused on the people running the business. And, we do deep background checks on not just the management, but the board, the auditors, the stock promoters, the, suppliers, everything around the business. And I think the big takeaway for us is that this is not a management team that we believe is ready for the prime time and ready for the public space. We think this company rushed to come public. Even despite it being around for 20 years, it still reports a material weakness. We found, obviously, a lot of weaknesses in revenue, CapEx, margins that weren't adequately disclosed. But, the CEO, we don't think he's the right fit for the company in a public space. The CFO, likewise, we felt like he didn't give a full disclosure of his biography. He actually was the manager of financial reporting that did a financial statement and non-reliance related to revenue recognition and lease accounting. So, that caught our attention. We pointed out the auditor has been changed 3 times in 6 years. We've also found some changes in disclosures around audit fees, which is a red flag. And then, you look at the board. Obviously, the board also is kind of picked, obviously, by some of the bigger investors, but the chairman of the board didn't put on his bio he was involved with Genius Foods, which chased the gluten-free fad. And that's another thing we like about the oat milk. I mean, I guess we can debate whether or not oat milk will be here forever, or is it just a fad? People's tastes change, new products come, and so I mean, we think it is ultimately will be a fad, and or the product category will mature and decline. So Genius Foods, the chairman was involved there. That hasn't been a success. He didn't disclose that. And then lastly, the audit chair who was appointed, Frances Rathke. I mean, what an unusual appointment to make. Someone who worked at Wild Oats, which after she was appointed started, disclosing changes of financial filings. And also she was the chief accounting officer at Green Mountain Coffee, which had an SEC investigation and an accounting scandal. So like, of all the people to put on your board, kind of curious, particularly, in light of all of our findings.
Yeah. I think that that last person you mentioned, Rathke, is probably the most unusual of all the names. One of the points you make is on foreign public companies, and Oatly being founded in Sweden, mostly European. Is this, you know, is this sort of structure where you've got a, European business or foreign business setting up shop in the U.S., kind of part of your screening process for finding shorts, or what's the relevance of that to the broader story here, and like why you think this is a good short?
Yeah, I mean, look, we just have an inherent skepticism of foreign companies that come to the U.S. And in Oatly's case, again, I keep bringing this back, but they were founded 20 years ago in Sweden. They're very well known in Sweden, and they came public on the Nasdaq here in the U.S. But wait, let's take a step back. There's a Nasdaq in Sweden. Sweden has its own Nasdaq, right? So why couldn't the company raise money in Sweden and in Europe, where it's better known, than in the US, right? And so, they come to the US, they pitch this phenomenal growth story, they market the hell out of themselves, they drop $5 million on a Super Bowl ad, they rush to come public, they partner with Starbucks, but that, now you can read that Starbucks is claiming a shortage of oat milk. Well, geez, I mean, we think Oatly has production issues, so, Starbucks was probably caught off guard by this, but look at the financials and the financial reporting. I mean, this company has been reporting numbers for years in Sweden and in the UK, and they're only giving you 2 years of audited financials. Like, why? And then 2018 are converted from Swedish GAAP to IFRS, and they footnote, oh, these are just estimates. Well, you can't even give like a solid number for 2018, and you're footnoting as an estimate. Buyer beware, right? I mean, so again, like, we just ask ourselves, like, why is this company coming public in the U.S. when there's an identical market, in Sweden, and why are investors getting less disclosures and less information here?
Yeah, I mean, I guess if you're them, it's just they want a list where they can get the most capital, the highest valuation. I mean, I guess it makes sense from their standpoint. But if you're on the other side of the trade, buyer beware, as you mentioned. So I'd love to just chat with you a little bit about process. I think with fundamental investing, the level of diligence you do is really important, and the sort of channel checks you do are also super important. Can you just maybe talk us through some of the primary research you've done on this beyond looking at their 20F and sort of public disclosures?
Yeah. So obviously we've done a fair amount of channel checks, both here, the UK. Also, we mentioned China. China is also part of the growth story. We sent an investigator there, and we came away with the feeling that they're a little bit behind their timetable in China. Also, since their announcement of entering China, Vitasoy, which is a public company that somehow all the brokers trying to value the company totally ignored Vitasoy in their valuation and discussion. Vitasoy is now launching an oat milk. So doing, the channel checks, obviously the SEC filings, but also reviewing the historical foreign filings to see if they make sense. But once we get a picture of that something doesn't look right, well, then we want to confirm it. And what we do then is try to find former employees. And so we did talk to some former employees knowledgeable about the US business and the foreign business. And, the takeaway was that there have been problems, confirming, what we're seeing in the numbers and what we're seeing, in the field. And I think certainly some of the accounting, issues were echoed by an individual we spoke with. When we asked them, what's the number one risk to the story, that, are the financials telling you the right story? And certainly we think they aren't. And so that was a big takeaway. And then the CapEx spending, obviously, coming in well above what the company has stated. Initially, I think they dropped about $10 million to start production in New Jersey. And, as they've grown, they've run into some challenges. One thing they don't talk about is that their location is right next to a Board of Education property, and they've been dealing with the Board of Ed for years trying to expand and have gotten stymied there. So the location they picked was not well suited to grow, and now they're talking about building a wastewater facility and costing over $100 million. That's one evidence of bad capital planning. In Utah, they talked about $50 million Obviously, COVID hit, but that's part of the story now. From what we're learning, they're spending over $100 million, in Utah. So talking to people, getting some on the ground intelligence is obviously very, important part of the story as well.
But it sounds like you actually hire investigators.
We do hire investigators, absolutely. We can hire private investigators. I mean, I'm not based in China. I don't speak Chinese, so I do have to rely on some expertise in those areas. But absolutely, part of our research process, where necessary or where value added, we certainly can.
Yeah. So with all of the risks that you've outlined, what do you think Oatly's, like, what is its fair value?
Yeah, I mean, look, we see this as a sub $10 stock. I mean, I think whether you value it on revenues or particularly gross profit, let's talk about the gross profit. Obviously, we pointed out the company wasn't very transparent that their gross margin is not apples to apples or may not be comparable to other companies because they put all the costs of outbound shipping and SG&A. And, as a young company, they've had to grow. They've had to, give incentives to retailers. They've had to pay shipping costs. And so you normalize those and you see that Oatly has the lowest gross margin of any public company, particularly in the, its high growth peers, whether it be Beyond Meat or Tattooed Chef or Laird Superfood, their gross margins are the lowest. So I think, to reflect that, you've got to put a lower multiple on their gross profit. And there's only two positive financial metrics you get out of this company, and that's gross profit and sales. And so, whether you value them on one or the other, look, we think this is certainly it's a sub $17 stock. It IPO'd at 17, and we think it's a busted IPO because ever since they've IPO'd, they've been losing share. Company's been dead silent. You haven't heard a peep out of them. And obviously the commodity costs have gone against them pretty markedly. So the thing should definitely be below 17, but we think after they come and tell investors and start disappointing the market, there's a lot of room for multiple contraction here. So we see it sub $10. And then the real question is, again, they didn't really make money when they were dominating Sweden. Will they ever make money as they expand and competition increases? And if they never make money and people want to stop funding it, they're going to have to they're definitely going to have to raise more money given the pace of their losses if they want to.
Yeah. What does their balance sheet look like now?
I mean, they just raised, money post the IPO. So they got, I think $900 million, but they've committed all this money to putting up facilities that are going to cost hundreds of millions of dollars, and they're burning money, obviously, and they're continue to spend heavily on marketing. And so, the cash burn, they're going to burn money at a pretty rapid pace over the next couple of years. They're going to have to raise more money. And the money might not be there on the same terms or at the same price that it was, the other month.
Yeah. So, I mean, as far as maybe just poking holes a little bit in terms of your thesis, like what would you say would change your mind on the stock? Would it be the China growth story? Would it be just a reversal in margins, or what? I mean, how would you, like, what would get you worried about your thesis?
Yeah, I mean, look, I don't worry about a takeover, certainly at this price level. I mean, we've seen food companies get acquired, but it's usually after the growth story's busted and the stock has petered out. Getting back to the people we mentioned, we also look at the analysts covering the company. If you look at the most bullish guy on the stock, he was also very bullish on a company called Boulder Brands, who was pitching, the Smart Balance story about how they had, the smart butter, the low cholesterol butter, and they were going to get into milk, and they were going to expand the brand. That never happened. That busted. Company petered out and ultimately got acquired 50% at a share price 50% less than what the bulls were talking about. But so I don't worry about a takeover at this price level. I mean, let's think about White Wave Foods, which has the Silk brand. I mean, they're dominant in the category, and that whole company with high margins and strong cash flow was acquired at 11 billion, whatever it was, 11, $12 billion. So, I think that's low risk. I mean, what would change my mind? I'd have to see a lot of people exit the market somehow, or, I'd have to see, them start raising prices and Oatly raise prices accordingly to offset some of the commodity inflation. I'd have to see evidence that Oatly's capital spending comes in below, estimates, and then they can hit their milestones. I'd have to see new product introductions that are well received. I mean, we don't think that their yogurt or their ice cream is, knocking it out of the park, and helping them grow beyond oat milk. If they're going to be just stuck in oat milk forever, then, and that category continues on the path it is, which is more competition, lower prices, then I think they're doomed. So I have to see the opposite of what I'm seeing now to really change my mind.
Yeah, M&O sounds like a complete product transformation. Like maybe they have to get into some other food category altogether. Look, I think this is a really interesting story. Ben, I wanted to just also kind of talk more broadly about, this like other fads or just other, fads in the food industry. Do you get the same sense that you do with Oatly with some of the names that are U.S. centric, like Beyond Meat is another one that is, sort of feels like a big fad. And when it went public, all people were talking about was the stock price, not so much the product. Yeah. Which at least for me, as kind of like I think about my own portfolio, I always get skeptical when the headline has nothing to do with what the business actually does.
Right.
It has to do with like how much money the VCs are making or just where the stock is going. What are your thoughts on some of the other names in the space that just kind of feel trendy, but maybe don't have lasting sort of staying power?
Yeah, look, I mean, we're constructively negative on the whole. They're all overvalued to various degrees, but like when we try to find a short, we try to find the worst company and the most overvalued among the biggest bubble. And, Oatly is the most overvalued and the worst company and the narrowest product line, in an inflated sector, right? So that's why we particularly like Oatly. You always want to go after the weakest one, in the space, and that's where they are in our view. But look, I mean, all these food companies, whether or not they have an early start, the big guys are going to play catch up, and it's only a matter of time, right? That's getting back to why we like, the food sector as a short in general. You just have very limited product cycles, right? I mean, and so you have a new sector, and it's almost really not new, right? As I said, oat milk's been around for 20 years. It's just being heavily more marketed now. Almond milk, et cetera. All these things have been around, but the companies have done a good job of marketing themselves as for those that are lactose intolerant and or more concerned about the environment. So it's the product cycle, the maturity. Inevitably, Beyond Meat, same thing. It's going to either have staying power or not, and the bigger players are going to either continue to gain share or not, and the multiples should compress.
It's funny that you'd mentioned your wife was a vegetarian or vegan, because I was actually raised vegetarian, so I've never had meat in my life, and so I tried it as speaking of Beyond Meat, I tried it just out of curiosity, like what's this like, this whole new burger all about. And I just remember thinking like, wow, this thing tastes like it was made in a laboratory, and which it is.
Right.
And, like you don't walk away from that burger feeling like you ate something healthy, right, even though that's the entire marketing premise of that burger. And
well, getting back to have you eaten something healthy? So there is a real question, and we haven't fully researched this, but we're getting some intelligence from the field that oat milk isn't necessarily healthy for you, right? I mean, there are sugars in it. It doesn't have much protein, but there's also this real question of, is it a healthy, is it a healthy product, right? Just because it's made from vegetables, there are added things into it, and so we're going to be digging a little bit more into that question. Somebody in the UK just posted an op-ed how they lost 20 pounds the other day by kicking oat milk. Well, I guess if you're addicted to anything, if you stop having it, you can lose weight. But some real questions about, is this really a healthy product just because it's vegan?
Right. I mean, I think the argument is more it's the sustainability piece of it. But your point on is it healthy or not is certainly an open question and up for debate. Relative to just whole milk or actual dairy. Ben, this was really fun. I'm glad you took the time out to do this. We're going to be following this story, and I guess maybe just to end with this discussion, are there any catalysts that you think people should look out for, or is this more of an earnings grind where every quarter you start to see those margins compress further and you just start to see them burn more cash flow? Or is there something else, like just in terms of hard catalysts that people should look out for?
Yeah, well, look, I mean, we're trying to coax a response out of management. Part of their whole pitch is that they're radically different, they're radically transparent, they're honest, they're world class, all these feel good things. Well, so far they've just given us a canned response that we're inaccurate. But I would encourage everyone to read the JP Morgan note. We saw it, and JP Morgan, I believe, it appears they went slide by slide and tried to get answers from management, and management was, in their words, somewhat, either caught off guard or didn't give full responses to some of our questions. I mean, we talked about the CapEx. What blows my mind is that they report gains on asset sales, but no cash flow from selling assets. Like, if you're the CFO, that's a pretty easy response, as to what's going on there. And apparently they punted on that. So, the catalysts are like, let's get some answers. I think the CEO is probably on his way out. I wouldn't be surprised. We just don't think he's the right CEO. Maybe this sort of accelerates his departure. Maybe he spills the beans. I don't know. That'd be great. But yes, we're certainly looking forward to earnings, or lack thereof, I should say. I think people are going to be looking at the top line sales, but we expect that to disappoint. We've been hearing some of the data out there. Some of the Nielsen data is pretty weak. We certainly know observationally that the discounting is happening, and that the company is losing shelf space. And on the discounting part, just to be clear, right? I mean, here's a company that's been talking about there's so much demand that they're having trouble supplying the market. Well, if you're having trouble supplying the market and there's so much demand, why are you discounting? Like, $1 million question, full stop, right? Full stop. So we do expect, the earnings to be, and the sales to be underwhelming. And, again, at the current multiple, there's a lot of implied downside.
I think that last line could be the title of the video here. Why are you discounting?
Yeah.
Ben, it's great. It's been great to have you on. You've obviously been super prolific on SumZero, and your contributions have been always provocative. And so thanks again for taking the time. We will certainly be following the story, and best of luck on the trade.
Okay, thank you for having me. And likewise, I've enjoyed participating with SumZero. Great platform. For anyone who's on the line who's not on the platform, highly recommended. A lot of great insights, great ideas, great people. A lot of alpha to be generated on that site.
Appreciate it. Thanks, Ben.
Okay, you take care.